So in this video, we're going to be talking about a possibility of Microsoft buying out GameStop. Will it happen? There's always a possibility, but I don't think Microsoft's really interested in the retail business. But before we talk about that, let's just talk about the pre-market. Right now, the pre-markets are slightly green, but I'm expecting the market to be green tomorrow. I could be wrong, unless there's some kind of bad news. I think the market is going to be green tomorrow. Maybe we'll have a little red day, and then Tuesday would be a green day, but I think the markets are heading higher. But anyways, let's talk about GameStop. So Camelot331 came out with a video. Well, it wasn't a live stream. I was listening to it. He was thinking that Microsoft will buy out GameStop and then take their 5,000 locations they have right now and convert them to Microsoft stores, which is a logical, it makes sense, and it's kind of logical because then Microsoft can build their branding. But in this video, I'll talk more about it later. But before that, I want to address this guy's comment. I heard that the New York Stock Exchange is investing how the short percentage is more of the float available. So I said I'd make a video about it, and I do today. So I'll make a video, and I'm going to discuss why GameStop stock is has a bigger short position than the entire float of the company. So we look at the float right now. They have about 65 million shares, and they have a share shortage of 66.4 million shares. So the entire float of GameStop is shorted right now, more than the float, which is rare and something you don't see very often. And how is this possible? This is possible is because when GameStop was like $10-12 and they had over 100 million shares, shorts came in and shorted the stock big time, and then when the stock dropped to around $5 and 14 cents, GameStop bought back 34.6 million shares for using $178.6 million at an average of $5.14. So, but the thing is, the shorts didn't cover. They kept their short position. So the float, so those shares that were shorted disappeared because GameStop bought them out. So they made them vanish. But the thing is, the short still had those borrowed shares. So in theory, those shares that the short sellers shorted no longer exist. And that's the reason why there's a 66.41 million shares shorted in GameStop, because those short sellers haven't covered yet, and that's why there's such a big position. And I hope that helps. But that's just my opinion, because if we look at their finances on the balance sheet, if we look at their total asset, current asset, so in 2019, in the fiscal year of 2019, they had about $1.624 billion in cash. Right now, they currently have about in cash, they currently have about $735 million. But so if we look at the cash position, they use that cash to pay off debt and to buy back stock. So as we can see, they had a total of 102 million shares at one point. Now they have a total of 64.3 million shares. So they bought back a bunch of shares, which created a tighter float. And then on top of that, shorts didn't cover. So now, that's why there's such a big short position on GameStop, because those shares that were shorted no longer existed. But yeah, anyways, so let's go back to GameStop buying out Microsoft. My apologies. Microsoft buying out GameStop. So let's just say, if Microsoft was interested and say they actually do want to buy out GameStop and convert those GameStop stores into Microsoft stores, how much would they pay GameStop? My guess is they would pay GameStop at least the enterprise value, which is $131 billion. Their current market cap is it was actually lower than that. It's like $778 million. So Microsoft would have to pay roughly, at least $22-23, if GameStop was super desperate and they just want to get rid of the business. But that's not always the scenario. There's usually a premium on top of that. So I would say, $2 billion, $3 billion, between $2 to $3 billion. So that would be around $50 per share. That's the reason why I'm so bullish on GameStop. If GameStop was worth $2.5 billion, their stock would be worth $50 a share. $50 a share because they have such a tight float. And I think that GameStop is undervalued because of the enterprise value. The only reason why GameStop stock, but sometimes enterprise value don't matter. And that's just the matter. It all depends on, what investors are willing to invest in the company. So if at one point, $259 million, while the enterprise value was $984 million. This was a really good deal right here, and right around here was also a very good deal when the stock was trading way below its enterprise value. Enterprise value can change time to time depending on the fluctuation of their business. Like if they spend more cash in one quarter, then the enterprise value goes down. But if their cash position increases because they're profitable, the enterprise value increases. So if they keep making money and they don't spend it unnecessary and they just keep building up their cash position, then the enterprise value will keep going up over time. And that's really how it kind of works. But if they spend cash or they lose money while they're operating, then the enterprise value goes down. So that's how I see enterprise value. GameStop, yeah. Anyways, so if Microsoft was to make an this whole press release, if Microsoft was to make investment in GameStop, if Microsoft made bought 10% of GameStop for, $10, $11 or whatever, then I could see a possibility of Microsoft buying out GameStop in the future and converting those stores into Microsoft stores. But for now, because Microsoft didn't take a big stake in GameStop, I don't see Microsoft buying out GameStop, in my opinion. But this is still pretty big news. I'm surprised that CNBC don't cover this news, because to me, this is gigantic news. This is just gigantic news. CNBC did make a video on GameStop, but I'm just surprised that GameStop doesn't go on CNBC and start talking about the Microsoft deal. I would totally be talking on on CNBC or Yahoo Finance if I was GameStop management to talk about the transformative Microsoft deal. So I think this Microsoft deal is pretty good, because right now GameStop wants to convert their business into a more of an Amazon style model, and in order for them to do that, they're gonna need to buy servers, and they're gonna need to ramp up their service business. And with Microsoft, they don't have to buy all these servers. They don't have to spend hundreds of millions of dollars converting their business, because Microsoft is there to help them. So I think this partnership deal is a big deal to GameStop, and this is a real help Ryan Cohen to convert GameStop business into a more of an Amazon type kind of service. And if that was to happen, I think GameStop can easily be a couple $1 billion, or even higher, maybe a $3 or $4 billion company, which would be $100 per share, which is insane. Look at Lululemon, right? Lululemon, for example, if we look at the max time period, Lululemon used to be a $2, under $3 stock in 2009, and now it's $346,000 in 10 years. In 10 years, a little less than 10 years, they are valued at $346, $45.1 billion. It's insane. GameStop, this could be GameStop in the future if GameStop can turn their business around. And if we look at Lululemon's share structure, it's 124 million. GameStop is 65 million shares. So yeah, GameStop could be easily a $300 or $400 stock if they can transform their business into something that investors are proud to invest into. But for now, it's a tough game. It's a tough game because they have to win over investors, and I think right now, honestly, I think right now is an opportunity, because GameStop is so undervalued in my opinion. But again, it could go back down to $200 to $300 million market cap. If GameStop management fails or if a stock market crash happens, I think there's a possibility we can see a $300, like a $3 or $4 price tag again on GameStop in the future. But that would be a no-brainer down there. Like literally a no-brainer, because the risk versus reward down there is so high. Because if you bought at like $3 of GameStop, you would have 4x your money right now at 12 bucks. And if it goes to 20 bucks or 30 bucks, you would 10x your money. So yeah, the return on investment is ridiculous if it goes back to $3 or $4. But well, I don't know. I hope so. I mean, I actually don't hope so because I have a position in GameStop unless I sell at a loss. But we'll see though. I think GameStop is going to be profitable moving forward from here on, like from now till like couple years down the road. I think GameStop is going to deliver consistent profitability for the next 2 years, in my opinion. We'll see if that happens, but in my opinion, GameStop is going to deliver consistent profitability for the next 2 years. But we'll see. Anyways, thanks for watching, guys. I hope you enjoyed this video. Subscribe for future updates and have a great day. Bye.